Anytime someone gets a name, a number, and a little bit of information, they go, I got a deal. This is unbelievable. They get like so jacked up about it. It's like the weirdest thing. In residential, nobody seems to do that. Everything you see on LoopNet doesn't mean it's available. And number two, it does, just like on Zillow, doesn't mean it's an attractive property. Like this property here, I've actually spoken to the broker a couple dozen times. He's a 40-year veteran in the business. So I'm not going to talk shit about him, but I am going to say like even individuals who've been in the business for 40 years are not paying attention to a few things which will cause properties to sell. So I'm going to share my screen with you. So this is actually a property I would like to buy myself, but I'm going to show you why I'm at a certain price versus what it's listed for. So anyways, here's the property. It's in Clifton. It's a warehouse property. Now, obviously this is just an example of a warehouse. You might come across families, development deals, anything else, but this just happened to be a warehouse deal. Clifton, I love the location, by the way. I'm a big fan of Clifton. I think the market is very, very strong there. This property here is 100% leased. And it's listed for $3.1 million. He claims it's a 6.1 cap. So the reason why I wanted to show you this deal is because what a lot of real estate agents do, which I think is the biggest mistake, which also is the reason why I feel like many of them don't sell a lot of properties. No, he sells a decent amount of property, so not specifically him, but I feel like for a lot of residential agents, they don't see it the same way. So in this instance, what pops out at you? You're looking at this property. We can even just say that this is a lead that you generated, right? You were prospecting or you got a referral. What do you feel like pops out to you as something that maybe gives you some inkling of value? Is there anything that pops out to you?
Net operating income.
Okay, net operating income. Is this, you were looking at this number here? Okay, great, 190. So we're gonna write down 190. Now, definitely one thing, great, I like it. What else pops out to you?
And then it also says for sale at 160 per square foot.
160 a foot, okay, we'd like to see that. 160 a foot, also a great metric to pay attention to, especially because, industrial or retail properties typically trade on a per square foot basis. Love to see it. Anything else?
Well, you had mentioned the cap rate before.
Okay, great. Cap rate. We can write that down as well. Cap rate, 6.17.
The total square footage of the property.
Also very important. Oh, great. One other thing I'm waiting for you to pick up on here.
I don't know why you picked up on all the numbers.
It's okay. It's okay. The last thing is this right here.
Yeah, I know.
100% occupied. Now I'm going to tell you why this is actually a make or break of a deal. Okay, which I think is very interesting, which again affects the value drastically. So a couple things real quick. I'm actually going to show you this screen here, which I'm going to give you a copy of this spreadsheet we're going to work on here. So let me actually just share the whole screen. So give me 1 minute. Okay, so here's the deal. Okay, obviously this is very intricate. You're going to learn. I use this spreadsheet every single week. I know it looks complicated. You're going to learn how to use it. I'm also going to give you this link right now so you can jump on into it. All right, it's in the chat. So you have it. And you can make your own copy. So number one, let me drop this back down to 7.5%. And I'm going to go back to 3.1 million. Well, a couple of things I want to talk to you about, which is first off, he's mentioning that it's 191,000 triple net. What he's not calculating is a couple things, right? What he gave me in the spreadsheet, which was just taxes and insurance. And then he says that they pay utilities. But as you can see, there's a lot of other expenses that he's not calculating into the deal, which again, this is a 40-year veteran, right? Like, so a lot of agents who come in this business, like this is something that as an investor myself, right? I have a fund, so we buy a lot of deals. It has taught me to look at deals a little bit differently than just a broker. So we have to be a little bit more conservative. The blend here is that when you find a good deal as an investor, as a broker, you can sell it in 5 seconds. The problem is that when you are a real estate agent trying to sell a deal and claiming that it's a 6.25 or 6.1 cap, right? Because he thinks it's actually 190,000 net. This property would have sold if it was already 190,000 net.
Yeah, and it's not.
So the point is that it's actually not 190,000 net. If we go over here to our summary page, I'm looking at not a 6 cap, but I'm looking at a 3.5 cap. If I bought this deal right now with a 7.5% interest rate loan, I'm obviously not going to. So just like in residential, you have to have a debt coverage ratio, right? When you're getting a mortgage, but it's on you. In commercial, the debt coverage ratio is on the property. That means that I have to make a certain amount of income over and above my debt service. So the debt service here, like in residential, if my debt coverage ratio was a 0.6, I would barely be getting a loan, which basically is just saying my debt service, all of my cost my income is only 60% of my debt cost. Okay, that's what this is saying. Obviously, I would not be able to get a loan if I only earned 60% of what my debt cost is. I would have to earn, obviously, at least over in commercial, this number needs to be around 125 to 13 to even get a mortgage. And just to kind of give you some reference, obviously, if you think about it, that like a 1 just means that you're even, right? A 1-to-1 ratio is my expense and my debt cost is equal to my net operating income, right? So I'm breaking even. Obviously, we want it to be at least 1.3 to, which keeps it's a minimum requirement for a bank. You might get away with 1.25, but 1.3 is a healthy baseline to say I have some profit left over. Obviously, as investors, right, if we're going to go in on a property, we would love for this property, the DSCR ratio to be as high as possible, right? We want it to be a 2. We want it to be double, right? I mean, that would be great. I mean, that's very rare. But keep in mind that obviously the higher this number is, the better it is, right? So I'll give you an example. Based on what he's mentioning at a $3.1 million purchase price, I'm buying a 3.5% cap rate, the 160 a foot like he mentioned. My cash on cash return, because of how the income is right now, it's very under rented, which a lot of people go, oh, that's great upside. Yeah, but they're in leases. I can't just normally kick people out. Now, apparently this guy's claiming that you have all leases have a 90-day kickout clause, which by the way is very rare. Okay. That's not a normal thing. However, and I even put that in this situation here, but I was saying here, they're rented at about $12 a foot today. And the future value, which this is gross. So that means what happens when you have a lease that's gross rent, that means the tenants pay the landlord pays all expenses. Gross rent, landlord pays everything. Mm-hmm. Triple net means the tenants pay everything, which obviously as a landlord, which one would you prefer?
Triple net.
Of course, right? So when it's not triple net, that means we have more risk, right? Because if a tenant leaves, we are now more into the red. Obviously with triple net, you have a lot less expense to worry about, a lot less risks to worry about. It is much more preferred when it's triple net. And obviously if I say to you, hey, I'm making $250,000 on my property, the value of this asset can be drastically different, whether it's gross or it's triple net. Drastically different. Like eons different. Like if this was hypothetically, because this property generates about, let's see, a total here at the bottom here, 225,000 gross, 225 gross versus 225 net is a very different value. Because if you just take off of a percent cap rate, right? Think about how different this is, right? If you take 225,000 divided into a 7% cap rate on your calculator right now, we could do that quickly. I just want to show you the difference here. So if you have 225 divided by 7%, which I'm just going to do in my calculator here, okay? And then I'm just going to hit equals. It's $3.2 million. So this property would have sold a while ago if this was a triple net situation. Now, because it's not, watch how crazy this gets, right? The 225 gross minus our expenses, which are all laid out right here. My expenses are 109,000. So 225 minus 109. I have a net income of 116, right? Now you divide that into a 7% cap rate. Look at the difference in value.
Half.
Half. And it's crazy, but like now as an investor, this deal goes from, if it was triple net, would be a home run, and or not a home run, but it would be a decent one. Let's just say it'd probably be about a double. Okay, we'd like it very much. I would probably make sense of purchasing it around $3-ish million. I like a 7.5, 8 cap in this market right now because interest rates are so high. But long story short, because of the price per square foot, which is also another metric, right? 160 a foot in this market. This is a $200 a square foot market, so this is below market value. So that's a plus. But because the cap rate sucks so much, like we're at the purchase price right now, we're at a 3.5 cap. My internal rate of return, which is going to be a term I would tell you to memorize like the back of your hand. Basically, internal rate of return is sort of just like, how people say the stock market has been spitting off a 8, 9, or 10% rate of return for 40 years. This asset is saying like, okay, if I bought this deal at a $3.1 million valuation and held it for 5 years, this is quarters, by the way, 20 quarters, 5 years, the building would be worth $3.7 million. This is after I increase the rents, kick everything up in rents, get it back up to market value. I would only make roughly a 10% rate of return. So it's like, think about it. If your money's in the stock market and you're a stock guy, why would you invest in this deal? You probably wouldn't. Because again, real estate is, for somebody who's been invested in the stock market, some people would just, can think that might be less risky than real estate, right? This is work. This takes work. Stock market, you could just put money in a stock and maybe it goes up, it goes down, who knows? So anyways, this is something I just wanted to point out to you because I feel like this is a big misnomer, because just because the guy says it's 191 triple net doesn't mean it is.
So that's what I'm saying. So you caught it because he had said it was a triple net, and once you saw his financial sheet, you realized that it wasn't.
Well, so he's not claiming it's triple net, but he's saying the net operating income. So he's just saying that they have they have income and then they have some expenses, but he's not calculating everything that I'm calculating. So when he sent me the rent roll, he only showed taxes and insurance as expenses. That's all he said.
Gotcha.
And I'm like, what about a vacancy rate? Because it's not always going to be 100% occupied. What about a management fee? Oh, he manages it himself. Okay, so then just nobody pays a management fee, right? So there's just some things that even a 40-year veteran isn't paying attention to and possibly wondering why no one's buying it. Because this property, I don't remember how long it's been on the market, but let me see. Here you go. It was on the market since June of last year. When I look at these types of deals, I want you to think like an investor first, right? It's saying, okay, like this is what this spreadsheet's for. Practice utilizing it because like anything can sound great. Like the metrics overall looked decent, right? Netting 191,000 per year, 6 cap day one. The price per square foot was pretty good. It's 100% occupied, which is nice to always see. And all of a sudden you go through all the metrics, you're like, oh, this is why it's not selling. So even like your development deal, which I think you said last time we talked, you had a development deal. So like give you some reference, right? I'm going to stop sharing my screen for a second.
I have a quick question. For a deal like this, would you still go ahead and set up a meeting and kind of present this to them and say, hey, this is why I feel like this is what I would offer, and see if that kind of opens their eyes up and realize that they're never going to sell at that price point and maybe they should accept your offer or at least entertain it? Sure.
So I'm going to, now that you kind of just get a kind of a background of how I think, I'm going to show you the steps here, right? So anytime, by the way, I want you to realize I do mention in my prospecting calls and how I speak language-wise as an investor to clients. However, obviously I'm a broker as well, and I shift gears a lot depending on how the deal looks, and I'll explain what I mean by that. What a lot of people do, obviously as a real estate agent, this is kind of like what kind of kicked me in the butt when I was in the residential business doing 100 transactions a year, and I was like, hey, like maybe this commercial thing's, what is this kind of world, right? I noticed that a lot of people, like in the residential space, have you ever seen, you see like brokers who just list a house at 50 cents on the dollar. I'm not saying this happens often, but I saw like you'd see this sometimes where like maybe it's not 50 cents, but it's 60 or 70 cents on the dollar. Like, oh, I could easily just buy that and I could renovate it and I can flip it and I can make 100,000 instead of an investor. So I saw too much of this in the commercial world, but it wasn't never listed on the market. I just would come across these deals and I would hear about these investors who were making $1 million in profit on a deal. And I'm like, why would I ever, if I came across something, ever not buy it? Right? If I knew that I could make $1 million instead of brokering it and making 50 grand. So I started going down this rabbit hole of understanding how an investor looks at a deal and how to know when I find, because in residential, obviously you've been doing it for very long, like, oh, if this property was listed at 500 grand when it's worth $1 million, instead of brokering it for 25K, I might as well buy it. Right? So I just wanted to learn and understand where that fundamental came from. I'm going to walk you through this process. So you generate this lead, right? This lead, let's say you spoke to John Smith, the owner. They give you this information. They say, hey, I want to, by the way, this property was listed originally at 3.9 million. So $800,000 more than what it was listed at today. You get all this information. John says, I want to sell my property. What do you think it's worth? It's 100% occupied. Here's my rent roll. I generate this much income. This is what the leases look like. I'm responsible for this expense. The tenants are not responsible for any expenses, right? I pay all of it. But I want around, let's just say I want in the 3 million range, right? I'll take, I ideally would list it for as much money as possible. This broker listed it for 3.9 million. What do you think I can get for it? Of course, I would highly recommend if you would like to try to take a listing, you could list this property, you could plug in all these numbers just like we talked about, right? Just like we showed. And you could say, hey, based on my evaluation in CoStar reports, right? Other reports you can bring, leasing, everything. I think my value is X. 100% you can go there, right? Just like a listing appointment, right? Like you'd go there, hey, I think this is where I came up with your CMA. In commercial though, I also like to give you a twist. So instead of just treating it specifically like a real estate agent, what I found is to think just like like an investor up front. What would an investor do if you got a deal of any price? What do you think the first thing they would do?
They would run those numbers.
Well, they would run, okay, so they ran the numbers. Let's say we did that 100%. But what's the difference between an investor once you've run your numbers and a broker? Because a broker is going to try to set an appointment and try to pitch a listing. An investor is going to do what though?
Come up with a cash offer.
Or an offer, 100%. They're going to make an offer, which is the complete different, right? Like major difference. Now, obviously, most brokers are not going to be in a position to make, to make an offer, can buy the property. But what I want to share with you is what has made my team successful and me successful in this space. I make an offer 100% of the time. So what I'm doing now is like, let's just say I'm the broker, just we're all together. We just generated this lead, gave us all the information. We're now going to come up with a number in which we believe this property is worth. He can want any number, right? Just like any client. So we make an offer. Right now, my offer might be 1.8 million bucks. Okay, even though he tells me it's worth 4 million, right, or whatever he says it's worth. Obviously, we can do our numbers and we're going to come up with why we believe it's worth 1.8. But I submit an offer instead. That's my first thing, right? So I generate the lead, I evaluate, and then I'm going to submit an offer on it. Oh, hey, I have a buyer. It doesn't have to come from you. I have a buyer, John Smith. I can be your buyer on every lead. You can literally just have Henry Eisenstein buyer on it, and we submit an offer. The reason why we do this is because we have found that more than just comps, more than just data or a spreadsheet, the biggest moving factor when it comes to getting a seller to make decisions is an offer. We found that instead of waiting weeks or until after we pitch a listing and we get declined or accepted, and then we have to wait weeks to get photos done, and then all this time, energy, and effort taken, and all of a sudden we have 3 or 4 weeks that pass to get photos done and all the details, all the docs, everything's uploaded, everything's good now based on your availability, his availability, whatever. All of a sudden a month has nearly passed and he's never gotten an offer yet, and he got it listed for $4 million bucks. You're like, I don't know why this hasn't sold yet. And now all of a sudden it's listed for $4 million, and now another month goes by, another month goes by, and you still don't have any offers. You're like, oh, maybe if I just made an offer at 2 million day one, I would have realized this guy actually isn't that motivated. It's the level of, the decision making and being able to decipher who's actually realistic and who's not, right? Like it's just like, again, a residential listing where they want $1 million bucks for a house that's worth 500. Would you take that listing?
No.
I wouldn't either, right? Just because it's going to be wasting everybody's time and the only person who's going to look bad is us. This is the shift, and it's understanding. And the reason why I push so hard on this is because it's like, imagine every residential agent in an entire marketplace across the country is overlisting properties at abnormal prices. It hurts the market overall, and that's why I try to explain this type of stuff. So it's like, now it's like, hey, whether it's a development, it could be a car wash, a self-storage facility, it can be industrial buildings, retail, hotels. It does not matter what it is. If we understand what it's worth and we make an offer at X price based on that figure from a legitimate buyer who can close, myself or any other investor maybe that you're working with, right? And you submit that offer day one and you can get immediate feedback within a short period of time. You can get these fast gauges, these fast feedback loops, which will give you like, oh, okay, I can list this property. Like imagine the seller comes back and goes, I'm never taking $1 less than 4 million. I'm probably not.
Waste your energy.
Go find another broker.
At the end of the day, it's understanding that entire Excel sheet that you just showed.
Mastering the
underwriting and then going from there.
It's definitely a big part of it, for sure. And obviously over time, the goal here is that in the first conversation, just like, obviously, let's just say there's a neighborhood that like the back of your hand, whether it's your own neighborhood or another, and you're talking to them over the phone, maybe it's a referral or anything else, and they go, hey, I want $1 million bucks, and you're like, I know this neighborhood, it's a $700,000 neighborhood, it's all of a sudden going to be like that, even at, you won't have to plug in all the numbers, because you'll just kind of like, oh, they want 400 a foot. It's like, oh, my net operating income is $100,000 and I want 3 million. You're like, okay, well, that's like a 2.5 cap, right? Like you're just going to, the lingo will start making sense. Exactly. So that's one of the biggest things I try to instill here.
I'm not there yet. Yeah.
So what I'm saying is that's me now when it comes to like fix and flips. Like I have the formula memorized. I know if it makes sense right away. Exactly. And I do the same theory that either I'll go in there as a cash offer first, and then if it doesn't work out, I can list it, whatnot. So it's very similar, just on a bigger scale.
100%. Exactly. So, and then obviously the interesting piece here is that like, obviously like, 90% of the time or more, right? We're not going to try to buy it.
Yeah,
right?
That's what I was going to say. For instance, if we generate this lead and we, underwrite and we come up with, let's just say the exact same one. I say, okay, then we reach out to him and say, we have a buyer that, is willing to pay 1.8. But what if we don't
change that? We can say we have potential buyers that may be willing to pay at
exactly.
5.
So at that point, you're literally just trying to gauge their level of flexibility or interest. It's
like when I made an offer on your Clark without really knowing. But I knew that was the number that they would come in.
Mm-hmm.
And it, like, look, it's just like those agents who go into an office or a listing appointment and they go, listen, I have options for you. We can either list it here, we can get you a cash offer here, or if you're a little bit, if you want to sell in 3 weeks or 2 weeks or something like that, we'd list it here. And I just try to have that feedback loop happen as fast as freaking possible, because so many, it's like the funniest thing in the world. In the commercial world, I don't understand why, I've never understood it, but it's like anytime someone gets a name, a number, and a little bit of information, they go, I got a deal. This is unbelievable. They get like so jacked up about it. It's like the weirdest thing. In residential, nobody seems to do that. You know, it's like in commercial, every deal, everyone just gets so excited. Like the whole life's going to change. It's like I just had a guy bringing me a deal where the seller wanted 1,000 a square foot. I'm like, I could build 2 buildings for the same price or more and still have probably $5 million left over. And I'm like, where on planet Earth can I pay this price? So it's noticing those kind of intricacies, which I kind of wanted to stress to you here, but that's kind of a foundational level of really like, now when you get a lead, right? Like obviously you said you had this development deal. It's like, okay, well, let's do the numbers, right? Like what is it going to be worth, right? So when a deal, like when it's all said and done, future value, right? Like
let's do Clark because I really want to know how much Clark is worth. So we have this deal. They're asking for 2.1 and they can only build 10 units. So it's a new dev, right?
New development, yep.
Yes, it's pre-approved for 10 units.
Okay.
What's the rental on it?
We said the rental per unit, we said it's about 3,200.
Okay, so ready? What we'll do is this. Now, obviously,
is it 1 bedroom?
As you can clearly see above here, this is set up for like retail or industrial, right? There's retail and industrial. If you want to change it, all you have to kind of do is, you got to plug in a few numbers a little differently. But watch, we'll do it for multifamily. Okay, we're gonna take. You said you have 10 units, right?
Was it a 1 bedrooms?
I think so. Well, no,
1 bedroom?
I have it all here. Give me 1 second.
Yeah, because the 3,200, it's 1 bedrooms.
So they actually
that's
changed
good.
it to 9. It's 9 apartments now.
Oh, even worse.
It's 1 is 1 bedroom.
So there's
7 2 bedrooms.
All right, hold on. You said, sorry, one more time. How many?
So there's 1 bedroom for 851 square feet.
1 bed. Okay, hold on. 850.
851 square feet. 7 2 bedrooms.
That's a 3,200.
And those square footages range from 1,077 to
1,200.
to 1,220.
All right, I'm just gonna ballpark it here, but go
Yeah.
ahead.
And then 1 3-bedroom for 1,300 square feet. And then we have 1 commercial space for 850 square feet. And then there's a terrace, but I guess that's not rentable.
No, I think that's
just
the deck, the rooftop.
a rooftop, yeah.
All right, so this is what it's approved for, correct?
Yes.
Yes.
Okay, great. So we have 0 income day 1, right?
Mm-hmm.
And then what we're going to do is that we're only going to deal with future value right over here. So like this is pro forma. Pro forma obviously is the future value of what we believe it can run for. So let's plug these numbers in. So number 1, let's do this. Let's start at the commercial space. Where is this located?
In Clark.
Clark, New Jersey.
Okay, do we know of a price per square foot we can probably run for?
That I don't know. How would we find it? We'd have to find comps.
Yeah, so you'd run comps. You can either, LoopNet's not the best, but like if you just have, if you don't have access to CoStar, which I would recommend, where you can typically get the best leasing data and the best sales data, that's probably the best place to look. But secondary can be LoopNet. You just see what's been listed and you try to go down to like what's going to be about right. And you can probably take about 80 cents on the dollar of what they have it listed for.
So I'm going to say just off the top of our head, it looks like between $18 to $20 a square foot.
All right, let's put 18 just to be safe. So it's going to be $18 a foot. This is going to auto calculate it for you on the commercial side. So 18 a foot times 12 divided by 12 is going to give you our monthly rate. Now we're going to say that obviously we got to build it. So it's going to probably take us maybe 2 years to build it. So we're going to start in quarter 8, which means 2 years from now, right? 4 each year, and 8 and 10. So we're going to be able to rent it by quarter 8 to 10, this range. We're going to have it up fully rented by quarter 10. That's what I'm saying. Now, obviously, if we get quotes or things that it's going to take a year longer, we change it. If it's going to be sooner, we change it. Now we have all these units. Now what we're going to say here, obviously it's not price per square foot. It's going to be different. It's going to be like a monthly rent on that unit, right? So this 1 bedroom, what do we think can rent for?
What do we say for 1 bedroom?
2,500.
2,500.
Great. So we're going to just plug in 2,500 here, and then we're going to do equals 2,500 times 1. Okay, and we're going to do the same thing, 8 to 10. Now for our 2 bedrooms, what do we think?
3,200.
I don't know if you're going to rent 7 units in 6 months. Maybe it takes a little longer, right? So maybe we do, just to be conservative, 8 to 12. Maybe it takes you a year to get them all rented. I don't know. Now, obviously, if you really think you can get it done in 5 seconds, do 8 to 10. I mean, just be conservative. And then this one for 3 bedrooms, what do you think it's going to get?
35.
I'm going to have a 5% vacancy marker here. Typically, I always like to have at least 5% for vacancy, especially, by the way, when you have a building that's only 10 units, like 1 unit leaves, 1 unit's not rented, that's 10%, right? So 5% vacancy is a very healthy number here. Now, obviously, it's going to show that we're going to have 0 income for a period of time, right? And then next year, the second year in, we're only going to have about half of it rented. And then we're going to start being able to do some hold on a second here. Year 2, we have some pretty low income. Obviously, by year 3, when it's fully occupied, we're going to be at 312. 312 in gross income after our 5% vacancy. Now let's go to expenses, because obviously we're going to have some expenses here. Did you get any expenses broken down or no?
Oh, do they have the taxes?
Yeah.
So it's like, let's just say that your taxes are something, I mean, Clark's not super cheap at taxes, right? Like you can say it's probably like maybe, I mean, honestly, this might not be bad. $3,000.
I was going to say, that sounds good.
What's the number?
30. I
Yeah.
pay 15 in my
That
house.
sounds about right. And then like $1,400 a unit in insurance also sounds about right.
The other factor that we could have used.
Then do you know if it's actually going to be separately, like with the utilities, separately metered?
I believe so, yes.
Okay, so what's going to happen here is that obviously you're not going to have much of this cost, right? Like every unit's going to have its own meter, right? So you can have, obviously commercial space hopefully also pays their own utilities. So I'm going to put like a small number here of like $1,200 each, which would just be for vacancy purposes. Landscaping or snow, we're probably going to have both. Is there a lot of grass there, or is it really just going to be a snow removal?
Snow removal.
Yeah, Clark doesn't really sound like it's going to have a lot of marketing costs. We're not going to really have a lot. We'll probably do half that. But this is also for lease up, right? Like you're going to have marketing costs. Now, it's not going to be every year.
So the startup cost.
Yeah, so we can actually do a little bit lower. Trash removal, you're probably going to be at least $2,400. Repairs and maintenance, you're definitely going to have probably about the same.
That's fine. It's just a ballpark.
Placeholder, yeah. And then, I mean, these are all just placeholders. Now, the management is going to kick up, obviously, in the future once the rental starts coming in. So, okay, this is just giving you some placeholders. Let's go back to the summary page. So now what this is saying is that in the future, the income on this deal is going to be net operating income of $266, right? So it is saying in the future, which is in 5 years, right? This property is going to be bringing in, here you go, final year, this is in year 5, $360,000 in gross income, and the expenses are going to be around $100,000. Now, that's telling us that the future value of this asset is around $3.8 million. Now, what is happening here is that this is saying it's a great deal. Now, here's the thing. This is not calculating yet, which we haven't done, is the last piece, which is adding in the cost of building it, okay? Which, do they give you a price per square foot that they think it's going to cost to build?
Yeah, because if it was already built at 2.1, yes, makes sense.
Yeah, like all day long. If it was built.
You're selling the land, then the approvals for 2.1.
Exactly. So, like, that's why I'm saying, like, you got to ignore this for a second.
I think it's about 800.
No, I don't understand, I think.
You can for an
I'm thinking like $225 a foot, somewhere in that range, between $180 and $225 a foot, depending on finishes.
Okay, we can use that for now.
So ready, 100%. We're gonna get 100% construction loan. Let's just say we put down 20%. We're gonna have probably a loan as high as probably 10% interest. We're gonna go to the income statement so I can see how much square footage it is. Okay, we're at 11,000 feet or so, give or take 11,000 feet. Now, what's interesting about 11,000 is, like, watch this, right? Like just off of us just looking at 11,000. I mean, like with just in my head, I'm immediately going, this is gonna be way too much money. Let's just say I'm gonna say 180 even times 11,000 feet is $2 million, which sounds about right to me. The capex that's levered, right? So that means we're going to put a $2 million budget here. And obviously we're going to use this immediately, but basically it's spazzing out because the deal doesn't make a lot of sense. So I could just basically...
$1 million to build, because that's what I think it costs. $1 million.
You think it's going to cost him $100 a foot to build this?
Yeah, he's saying he sounds like.
But I'm just saying that's all like here, right? So this is saying basically that it's going to cost us $1 million to build it. This is basically saying that we're going to be spending 2.1 to purchase, $1 million in cash. I mean, again, I don't believe it's going to cost $1 million. If you have a contractor that can do this for $1 million, I'd like to know who they are. I'm looking at this as you're buying this as a negative. Overall, this deal is just like screaming at me not to do anything.
I know, we brought this stuff to two of our investors, and they're like, they should be asking for 50%. It's like he's asking for double.
Yeah, so I agree with you, right? So watch what happens, right? This number really should be $2 million. I mean, I really do believe you're somewhere in that range, which...
And he should be asking for $1 million.
Let's see.
Well, we did bring an offer, sort of, for 1.9.
So the challenge here is that you brought him an offer at 1.9?
And he said no.
Guy's a dumbass. Pardon my French, but like, there's just impossibility. Like, I could not even imagine trying to do that and him having that. It's not even close to an opportunity, right? Like, because if you're going to be into it for $1 million, I don't even understand how anyone can even value it that price, because you're essentially saying, let's say it's worth, let's say you're into it for $3 million. which is impossible to me to think that way, but whatever. So you're into it for $3 million. I still don't understand how on planet Earth you're going to be into how you're going to make this deal work. You have to put 725 down. You still, by the way, you're in an operating deficit, not only just, it's probably half that because it's counting all of our expenses day one, which we're not going to have, obviously, but we're going to have some costs. So even if it's only like 250 before, obviously everything's rented, your rate of return here is, you're saying your equity multiple is half, which basically means you lost half your money. Your internal rates of return are negative. This deal here is something that I would tell you never to invest your money into if I was an investor.
Yeah, and that's why it's sitting there. And we already told them, we're like, you're asking for way too much money, way. If it was half of it, we had buyers. And then we even the one that we bought for 1.9, he said no. So we're like, okay.
Yeah, 1.5 million. Hold on one second. That doesn't make any sense. Yeah, whoever, by the way, offered you 1.9, I'd bring him a bunch of deals because if he's willing to pay 1.9 on this, there's a lot of money to be made. If you could probably, I'm just saying even 3 million all in, which basically still saying, by the way, if you're 3 million all in,
you're still negative.
You're still negative. If you're all in for 2.5, which is basically buying the dirt for 500 grand, you start getting into a realm where this makes sense for sure, all day.
Yeah, see, but that's what I'm thinking. I'm saying 1.5 for the land and $1 million to build.
I just don't think it's $1 million to build is what I'm trying to say.
Can we run one more real quick? Because
I think we're going to run out of time with him.
All right, we just have a meeting later today, and this one I think is, I don't know. The problem here is we don't know the insurance cost.
It's all right. We make, look, everything on this expense list, we make assumptions. So, what's this? Is this another development?
Yes, and they're asking $23 million.
$23 million. Okay.
It's approved for 400 units. That are going to be about 802 square feet each, more or less.
But that's your retail space. You see the saleable square feet.
How much? Sorry. So hold on. How much of each?
802 square feet each a unit.
For how many units? 400?
The total sellable square feet, I guess the entire land is 320 square feet.
Is that correct?
So hold on, I'm just going to get rid of the 2s and 3s, right? Any commercial space?
Yeah, retail space for 1,825 square feet net area.
How much do we think we can rent each unit for?
This is for sale, not for...
So the comp that we have here...
Say $1 million.
2,000 a unit?
No, we're not. This is not for rent. It's for sale. So those will be each unit will be to sell.
Oh, they're all condos.
They're condos. Yeah.
Got it. Okay.
So they're gonna range. This is where it gets tough. The comp across the street are selling from 615 to 2.2 million per unit.
Where is this?
North Miami.
North Miami. Okay, you're gonna try.
So we just pay $1 million each.
Well, I would just tell you, obviously the comp ranges are insane in Miami. Now, this is in Miami Beach?
North Miami.
It's just in North Miami, because, those are two different...
North Miami. Yeah, North Miami.
North Miami, okay. So North Miami, just to give you some reference, is a much worse area than Miami Beach. Now, I'm not saying it's a bad area, but it's definitely much worse than it is in Miami Beach. I live in Miami Beach, and I know for a fact that you could definitely sell condos here. I've seen dozens of them sold. Personally, I've seen many of them sell for millions of dollars. On the water, on the ocean side, you could sell them for 5 or 10 or 20 or 30 million, right? Mm-hmm. Here in North Miami, they don't go for that. Going for 500 or 600K is, rough, right? That might not be that easy, is what I'm trying to say. So what I wanted to show you though, right? So watch this, right? In this spreadsheet, it's gonna be a little bit difficult to build that all out. Yeah. But I will say it to you like this. Let's go to, this is just some notes here I've had from other things, right? So let's go to a future value. We think they're each gonna sell for, we're gonna go for units. We're going to say 400. How many?
Mm-hmm. Yes, 400 units.
Okay, and then we're going to say sales price per unit, right? Which is, we're going to guess 600K based on comps. Obviously, we're going to have to go through some of them, but let's just go off of 600. All right, so 600,000. So this is going to be ending sales price, which is going to be the total, right? Which is going to be that times that, $240 million. $240 million. Now, obviously, we have to confirm the 600 because that's going to be one of the biggest changes here. Now we're going to go to what does it cost to build these 400 units? So we're going to say it is the square feet, which is 850. Now we're going to figure out here is cost to build, which, by the way, I'm telling you, in Miami is infinitely more expensive. You're probably going to be all in for this thing for $350 to $400 a door per square foot. So you're going to do equals 400 times.
I'm going to master this and do this stuff.
Times this, right? So this is a total square footage, actually. This is, total square foot. And now we're going to do cost
Price per.
to build, which is going to be, let's just say
times 400.
400 a foot equals this number times $400. So $136 million to build it. Right now, obviously, cost to acquire.
This one is 240.
Right, which is 23 million. Now, here's the thing. Obviously, you have probably some holding costs, right? Holding costs equals, let's say, 10%.
Ah, a gente tem uma hora.
Right, this number times 10.
Acho que é uma hora. Eu achava que era meia, por isso que eu cheguei.
All right, so then now here,
Hoje é duas?
thing here is going to be a few things. Total expenses, which, by the way, this is not total because there's a lot of other things like cost of money and other things we're definitely including here. But we're just going to do this real fast. Plus this 172 million total sell, right, is this. And then you have costs to close, which is going to be 6%. Or actually probably 10%. Minus 10%.
You freak me out because I want to know that by heart. How long is it going to take for me to know that by heart?
I think
you just end up doing the deals, right? I mean, like, it's just...
I know, I get it. I know.
It's the same as with residential, just way bigger.
Yeah, it's literally exactly the thing. Exactly. Like, if we're doing a flip here, you're just going to have, like, 3 less zeros.
Yes.
So cost to close is, say, 24 million bucks. And then we're going to say equals margin. We're just going to do profit.
Formulas on that Excel sheet that's on here.
No, that's fine.
Yeah.
So we're going to have 240 minus total expenses minus cost to close. Why does it say false? What the hell just happened here? Oh, I meant to do minus 43 million. So what this is saying, though, because I also want to see this, profit per unit equals this number divided by 400. 100 grand a door you're going to make roughly in profit. And then I'm saying, let's say profit per square foot. Because I'm curious. Because this, like a lot of these different things change, right? Divide by total square foot in the building, 126 bucks in profit. So basically what we're saying is that we're going to be selling these units at a margin of 500, at a profit margin of 126 bucks. So if this cost per square foot to build it goes from 400 to 500, we make no money. If our if our estimated sales price is 600, it's actually 400. Watch this.
No, then we're done.
Yeah, we lose 70, but we lose a lot of money. Our profit margin is negative $28 million.
We need to get the zip code. Do we have it?
So the goal here is we need to be very very careful of what we estimate the cost to build is. We get a true estimate to build, and we get a very, very conservative idea of what each unit will sell for. You plug in the numbers, and that's it.
If we keep it at 600, then does it make sense?
If we can sell each unit for 600, which, by the way, are these one bedrooms you said?
No, we don't have. I don't know the details of how many bedrooms each. But let's just use worst case scenario.
Okay, I'm just saying,
well, look,
it says 1, 2, 3, and 4.
This is the comp. So the comparable across the street has anywhere from studios to 4 bedrooms.
Right.
So
but I'm saying, okay, well, and obviously it's all going to depend. So we'd have to be very. And by the way, we can also count. I mean, it won't be in this little spreadsheet, but we can build one out, which will basically say, okay, if we estimate studios to sell for this, 1 bedrooms to sell for this, each one, and by the way, no matter how many bedrooms, we're gonna have an average price per unit that we're gonna, or price per square foot that we're gonna sell for. Right now we're saying, because watch this, right? We're also saying sales price per square foot equals 240
this is the name.
by total.
That's the comp.
this is the comps.
Okay, so hold on. So just to give you context, the comps that they're giving us is called Nexo.
Next to residences.
Yep.
North Miami Beach.
They're saying North Miami Beach. So would it just...
Biscayne Boulevard.
Okay.
So you think that 600 is still a decent number?
If you the address, I mean, obviously we can go more into this, but selling at a per square foot, and this is off market or listed on the market?
Off market.
Okay, great. So I'm saying, look, yeah, this could actually be interesting. I mean, look, if this is all accurate, and I also have a developer that I have that would be interested in something like this, if this is all obviously accurate and you're going to make 40 million, I have somebody we can maybe make some money on today, and we can try to figure that out. But we're saying that we're going to sell for $700 a foot roughly. If that is the case, this deal makes sense. If we're not going to sell for $700 a foot, then this deal is going to be very tough. If this is all of a sudden even 500, not 600, it becomes not even close to worth it. Because and by the way, just to give you some reference, at 500 here, and because this is an interesting, right? Profit margin percent, right? Which is basically my margin divided into the total cost to do this, which is the expenses here plus the cost to close. I'm making nothing if it's 500. I mean, I'm making 3% profit, but if it's 600K, I'm making 21%.
I think I'm almost positive it's 600.
Give me a look. I would say this. Email me the details. Let me see if I can.
So we have a meeting with the sellers later and with our potential buyer. We kind of connected the two.
Nice.
Because neither of us know or knew any of this stuff. We're kind of going to see what happens. I mean, if you want to hop on the meeting with us or if you have time, up to you. But
sure.
Yeah,
I mean, look, obviously I would probably just say, let me know how it goes. And then based on a few things, like I also might have somebody else who might be interested, obviously depending on where this is and what the situation is.
Let's see how it goes, and then we'll kind of touch base back with you and see if maybe it's a deal for someone else or if our buyer's not interested.
Okay. Yeah, sounds good.
From there.
That works.
But you answered our question. If we could sell it at the back end for 600,000, then 23 million makes sense.
If it's above, yeah. Well, hold on. This is half the battle. The other half of the battle is the cost to build it. Because if you get a budget, I'm just saying, if you get estimates of 600 here, right? I don't care if you're selling for 600, it doesn't make sense to build it.
If the cost to build is not more than that.
400K build.
I'm just saying, like, these two numbers, hold on, I'm going to highlight these just so you can see this, right? The cost to build and the price per unit are the variables. Everything else you can't change. These two numbers need to be figured out. You know, if your cost to build is 600, you got to sell for 900.
He calculates per door. So did we do the per door calculation?
Yeah, he does.
In New Jersey, he does 35.
35, but the variable that he gave us was that he needs to go on insurance because he doesn't know what insurance will cost, because in Miami insurance is way higher.
Your insurance cost could be...
Yeah, exactly. So that's without the insurance, our buyer is like, yeah, this makes sense. But until you tell me how much the insurance is going to be, I won't know if it makes sense.
Got it. Okay, I can work on trying to get you an insurance guy and see if that will help you. A few things, but I'll send him a text right now and see if we can get you any details, or I can even just connect you.